Yeah, Vince.
Morning, everybody. Welcome back to the Opportunistic Trader. It is 9:30 on Friday, and
On
we're
what?
joined by Tony Greer of TG Macro. How's it going this morning, Tony?
Good, Mike. Happy Friday, man.
Happy Friday. It's been a crazy week. Some good volatility. You've been all over it. I think last Friday you came on with us, and you really laid out a few shorts in small caps, emerging markets, social media, and you were really on top of these recent moves, and also home builders. You've been what are your thoughts here after a volatile week?
Covering a little bit in home builders because the trade finally fell in my lap and the money's been sitting there, burning a hole in my account for a long time. So I'm kind of taking that off. I think there are other, that's in the home builders. Social media, I'm kind of sitting tight for a little while. I realize that there could be a bounce, but I don't really feel like aggressively trading it. Facebook traded down to the Cambridge Analytica low. There is obviously going to be buyers around there. There are sharp guys in the market, sharpshooters in the market that are looking to take a shot off of that level. So I'm betting still that it comes crashing down through that level. I'm just trying to decide if it doesn't trade 168 first. But I feel like everybody's going to take a shot at it, and all of a sudden they're going to be, out of the money also really quick. I think we could have an outside day down in Facebook today, where if this thing goes negative, I think it closes below 150, and then you're going to see the waterfall like we haven't seen in a while. So, that's why I'm sticking with the social media short. Let's see, what else have I got? Emerging markets. I bought a little piece of that back as well, just between you and I, just because we had a pretty steep pullback yesterday and the day before. I covered the day before. I covered like a third of the position with the full intent of putting it back out.
Vince,
Should EEM rally back up to
right
43,
on the opening?
43 and a half. And that's it. I'm looking for my other opportunities, really.
Yeah. So tell me this. It's been a volatile week. Global markets down, 5 to 10% or 3 to 10%. What are your thoughts heading into? What's the mindset heading into Friday afternoon volatile week? It's not you specifically, but the market, a retail trader, investment bank. Is there more liquidations like this, or is it more buying coming in after
Well, the only buyer that I think we have to be afraid of taking this to another level is the president's working group inside the Fed. They participate in every market. They inhale half the treasury market. I think it's foolish to believe that they aren't around in the S&P when they need to be. We've seen those hockey sticks thick saves, in the middle of a heated New York morning sell-off where all of a sudden the selling stops and the S&P relocates 50 handles higher. That to me is sort of, telling that is the president's working group, and that's what they do. So that's really the only buyer that I'm on the lookout for. If I look at how the S&P is behaving, it looks like it is a classic breakdown. So, I'm not going to expect it to be over, but I never do when the S&P dips below the 200-day. I'm a momentum trader, so we're always looking for it to go lower. But, at least we've got this guideline here that the market should be falling in order of decreasing market capitalization. Right, with IWC going down the most, the micro caps, and then the Russell behind that, and then the mid caps behind that, and then the S&P, and then the Dow Jones. So, as long as that sort of order of magnitude continues to reveal itself, I'm going to keep looking at the lead horse in the micro cap stocks and keeping an eye on interest rates as I sort of guide my way out of the rest of this week.
when you look at some of these moving averages, like let's call it the 50-day, the 100-day, the 200-day, a lot of these key sectors that you take a look at, the home builders, EM, S&P, Russell, where do we fall right now? Is anybody above their 200-day moving average? 50-day, 100-day,
This is to sort it out, like this story does tell. The Dow Jones is between, above its 200-day but below its 100-day moving average, and then you go up in market cap and you got the S&P that's already below its moving average. You've got the Russell that's well below it. You've got Russell that's well below it with a 3-month long sort of blow off topping pattern, which is a little bit scary. And now we're back well below the 200-day. And it's actually farther below the 200-day than the last 3 or 4 trips down in the last 2 years. So, that to me is something to respect, that these indices that were just up and to the right for so long are finally demonstrating the ability to go down. Um, so I think, like I said, just keep an eye on the lead horses to guide you, lead horses and interest rates to guide your way out of this week. It looks like they want to bounce today. So it makes me happy that I covered a little bit of my position. If they want to rifle them from bell to bell now, they can. But I would be more, the bear market characterization would be more like a market opening up higher and everybody getting all excited, and then 11 o'clock rolls around and all the buying that they did is already underwater, and now we're starting to plunge toward yesterday's low, and everybody's like, oh shit. And then you have, like, one of the worst weekly closes, that which could be coming. We've had the monstrous down day this week already on Wednesday. So to think that this selling is done, or to think that people aren't trying to get stuff off of their books before Friday, is kind of crazy to me, especially with the smaller cap stuff unraveling. So, I'd be still a seller of this rally. I'm kind of waiting in the wings a little bit higher in a couple of the indices that I've been playing short, in order to continue to, sell on rallies and cover on steep dips. But I don't think we're anywhere near the levels that I'm looking to sell today. So I'm kind of expecting morning buying to fade into an, oh shit, that was a horrible close. And the only thing that's standing in the way of that is the Federal Reserve's President's Working Group.
What about you speak to a lot of people, have a lot of friends, sense of how people have been positioned, where people are positioned at the moment. They traded this down well, or get the sense that a lot of people were placing longs in. Uh,
Well, the magnitude of that move says that caught everybody off sides, off guard, so if anybody's telling you that didn't hurt, they're crazy, right? No matter what happened, there's going to be a massive drawdown in everyone's stock account when the October statement comes. And it's very, very difficult to say where this is going to end up, being April 12th. With the magnitude of that move this week and me expecting it to close lower, I mean, I'm on guard for lower prices this week. I'm on guard for lower closes for October, and I'm really checking my longs to make sure that I'm checking my sanity along the way, and that I still want to be in them. So, that's my mindset, and I think that would serve, the regular everyday investor fairly well.
Absolutely. As we're speaking, I'm pulling up the SocGen, New Edge SocGen CTA index. So they have, the CTA index, the trend followers, and four. So it has about a 2-day lag. So they were down about 5 to 10%. Let's call it their number, 3 to 8%. That was before Wednesday. And to be, the biggest positions out there were U.S. equities, oil, and crude was trading $75. And we're 71. S&P, obviously, they're down some as well. They were long yields off. I mean, not a huge. Those sort of definitely got well.
Yeah.
What about any key levels that you're watching that may be off the path that others, Russell, S&P, averages, crossovers, like that?
No, they haven't crossed over yet. They're still as wide as could be because they're still, expressing the rally, right? Like, the rally just keeps the move as far as the rally keeps going north and ascending away from the moving averages, they start spreading out real wide. And that's where we are right now. And if you look at the major breakdowns that we've had in markets past, that's what it looks like, right? There's a big, big hysterical race to a new high where the moving average is all spread out, and then a market that takes them all out at once, like we've already done this week. So no, I'm not going to stick to. I'm not going to say that I've got a better mousetrap or smarter mathematics than anybody else. I'm looking at the 200-day at 27.75. I'm looking at the 100-day at 28.28, and I'm looking at the 50-day at 28.82 in the S&P, and I'm prepared to see each and every one of those prices. Because the markets that are going to be super volatile, if this market is going to collapse or is going to at least have a meaningful pullback that, the market's been sort of overdue for, then it probably is going to, ratchet higher and get everybody excited again and then come crashing down. So, I'm really looking to kind of trade ranges pretty aggressively. I'm looking to buy volatility on dips like I've been advising, when the market's sleepy and anytime you look at CNN and they're talking about Dow something thousand, or they're counting somebody's market cap, or they're counting somebody's money, that's a great time to price up options. And so you get to buy options now when the VIX dips to 8 to 10 or 12, and you get to sell them out like, I'm trying to do this week when the VIX pops to, where are we today, 25-ish or so, 22, really puffing out the value, the options premium that you're long. And, rinse and repeat as many times as humanly possible in this move down. And if it's a real move down, I mean, we'll get the chance to cover and reshort 25, 30, 40, 50 times. I have no idea. But, you got to be sitting on the edge of your chair for this. VIX 22 is not something to sleep on a Friday afternoon.
Yeah, absolutely. I mean, that's what it comes down to. And I had a lot of trading.
Did I lose you?
Can you hear me, Tony? Tony, can you hear me? Tony? Hey, Tony, can you hear me?
Yeah, I can now. You kind of went dark for a little while.
What about yields? What's your take on where we are right now?
I'm still looking for upside. You know what I mean? I'm really trying to be respectful of it. I listen to my ears are open in the bond market at all times. I try to listen to the guys that have more hands-on experience with it than I do. And, I get a really wide range of impressions of what's going on right now. I've got guys that are sitting on treasury desks at major international banks saying, look out, man, the 10-year could trade 350 so fast your head would spin. And then I've got guys that have, been treasury salesmen for 25 years that are saying, yeah, nobody's really outraged here. We probably think there's a pullback towards, 3% or something like that in the 10 years. So they're expecting a bond rally, and they're really very relaxed about it. So, I'm always on the rather be prepared for more volatility side. And, so that's where I am. I'm kind of postured for rates going higher, but my ears are wide open. I'm trying not to trade the treasury market. I'm just trying to let it be the guide for my decision making in the equity market.
Well, that's the thing, because in the past, typical risk-off sort of moves have been, yields lower, S&P lower, but in a way, this one was triggered by yields higher. Knee-jerk on Wednesday, Thursday, yields actually came in. And then even if you take a look at traditional risk-off sort of things, like when you look at the currency market, dollar yen or Aussie yen, things like that, Aussie was actually up pretty nicely yesterday. So it seems like it's a lot more about positioning more so than the typical risk-off sort of trading.
Yeah, people it's just the kind of market where prices get to levels that people are forced to trade. It's a hand forcing type of market. So, everybody that was sitting there on their complacent longs for a little while, all of a sudden got flushed out in one day and they didn't see it coming. And, so now they're forced to readjust. And, there's definitely a positioning issue. There's definitely, not having enough respect for the higher vol regime that we're in issue. And, we'll see. It's interesting to see that FANG is finally coming off. Like we've already talked ad infinitum about Facebook, and it's gone down another 50 cents since we spoke about it last. But now, Amazon opening up at its 100-day moving average, proceeding lower already. Netflix got really pretty, damaged nicely down to its 200-day, which hasn't happened in a while. It's got a pretty vicious topping pattern in the rearview mirror. And then you've got Google that's finally coming off, and that thing's been really tough to stop. It broke down through all the moving averages, which has happened before. It also landed spot on a trend line to the dollar on the low of this move, which was down at 1091. And so, there's a place for the longs to shoot against there. It also opened up above yesterday's high and it's proceeded a little bit lower. It's below the 200-day, and I expect that to curl over. So you got to be patient. You got to be patient. This stuff takes a long time to develop, and it takes a long time to wear off the effects of a bull market.
Yeah. Last question. Any thought on earnings? We had some financials come out this morning. I see right now Wells Fargo's up about 1%. JP Morgan's up small. Any thoughts on what the bank said?
Yes, I think they don't mean a goddamn thing. Honestly, I don't think I think you should turn the earnings off right now in this market. This is going to be a student body right or student body left kind of thing, and the sectors will definitely rotate within it. But I don't think that anybody is going to come out with any kind of report on either side of the coin that is going to dramatically turn the tide away from the direction of the S&P, if that makes sense.
Yeah, absolutely. It seems like it's more of you got to really pay attention to the tape, the moving averages, and what's going on with the liquidity more so than anything right now.
Macro is back, man. If you want to take a look, why you mentioned financials, there's one thing that I'm looking at. There's a huge head and shoulders in the Goldman Sachs, and Lloyd Blankfein doesn't work there anymore, right? So those are two insanely bearish, factors for ticker GS. And now that it's violating the neckline, if it breaks, I'm looking for about a $60 move lower from here. So from
is Lloyd 100% out? I thought it was the end of the year. It could be.
No, Lloyd transferred the reins to David the DJ Solomon.
Good for Lloyd. That's one of the things I remember he said all along is there's never a good time to leave, because either you leave when things are good and you don't want to leave, or you can't leave when things are bad because then it's like you're bailing on your team. Yeah, good for Lloyd. Enjoy it. I'm sure he'll write a book and he'll be up to something new soon.
Yeah, Lloyd is the man. I enjoyed reporting to Lloyd for 6 years at Goldman Sachs, and I will always speak highly of him no matter what the media says or anything like that. I mean, he's the reason that place was the New York Yankees of investment banks, and now that he's gone, I am not optimistic, and it's got nothing about David Solomon to do about he's a wildly skilled and talented guy in finance, and I'm sure whatever happens, he'll right the ship, but he's got a big technical disaster to contend with right now. He's got a pretty flat yield curve to deal with, and it seems like Goldman Sachs is turning a lot more into a sort of technology company, with their approach. They're trying to get into a lot more merchant banking and consumer banking, and really stay with the times. And if anybody's going to do it, they're going to. So I don't count them out. I'm just trading the chart. I'm just trading the chart against the story. And being a big Lloyd fan, I would not be shocked if the stock took a little bit of a dip because he's gone.
Yeah, absolutely. All right, Tony Greer, thank you very much. Volatile times. I appreciate your thoughts, your insight. As always, you've been all over the markets. Really been trading them well over the past few weeks, months. You can catch more of Tony's stuff. TG Macro, look him up. A lot of great information every day. Thanks a lot, Tony. Talk to you soon.
Yeah, man. I'll talk soon, Mike. Thank you.